Good day. This is the Elliott Wave Weekly Update for the NASDAQ 100, being recorded on Sunday, December the 29th, 2024. I'm going to start with the cash market, the NDX. And as I presented in the SPX, I'm not actually going to review the entire 3-year weekly chart. No need, there are no changes. So I'm still leaving the high that the NASDAQ put in on December the 16th as the completion point for intermediate wave 3. And off of that level, we have started, in my opinion, an intermediate fourth wave correction. Now, within that correction, as we can see here on the daily chart, I have marked waves A and B complete, but those are not the minor wave A and B as complete. They are an A, they are a B, but they're of minute degree. Now, we still could see a truly heavy downturn in the market, but I'm actually of the opinion that that's likely going to be to put in minor wave A, which looks at this point that it's going to be a zigzag. A 5-3-5, so 5-3 and then another 5 down. And very likely, we're likely going to get down to that 1.618 level, which is 19,848 or 19,850 in that area. We have fib support for that intermediate fourth wave, and that'd be 0.236, it's just the yellow line, and that's down at 19,428. Just above there, we also will find support from the daily 200, which is 19,650. So there's plenty of support out there. In fact, if we move up a little bit higher on the daily, we have the daily 50, which is at 20,928, and that should provide some support for any move down that I believe will come tomorrow and Tuesday. It is going to get interesting because right now the market, as we anticipated, we had the possibility that we still had one more leg up to do to new all-time highs before even beginning this fourth wave. And I had left that open, but then after Friday's trade, it does appear that that's not likely going to be the case unless we absolutely turn higher from the opening in Globex later today, Sunday. So I'm thinking that we are in a C wave down. And now that's going to be completing minor wave A. So let's not forget that in intermediate wave 4, there are going to be 3 legs, an A, a B, and a C, and those are going to be of minor degree. Now, as we break that down, the A wave, the minor A wave, will also likely be a ABC down. Now, that does not suggest that, right now, I think we're going to be coming down in 5. So I cannot discount that, being that I believe the A wave was 5. If we bring this down, we just take a look at the 4. Let's start to take a look on the inside so we can put some times to what we see happening here. And we're going to open this up, and we can see it was 5 waves down. So 1, 2, 3, 4, 5. So it could be 1. This could be 2. And now we're going to do 3 and a 4 and a 5. And then that will be minor wave A. Now that's more prevalent here in the NASDAQ than it is over in the S&P. So we might just see that wave A will end up being 5 waves down. And the S&P is a little bit different, but I've left open that A wave could be 5. So in that case, we really could be confronting the same situation in both markets, where we really begin to tumble as we start to progress deeper into that intermediate fourth wave. Now, again, speaking to the intermediate fourth wave, we already know that, as I've been talking about, that Elliott has taught us and shown us that the fourth wave, once in progress, will usually find its terminus, its end point, within the price territory of the previous fourth wave of one lesser degree. And again, just to kind of review that, is that right here. So we're in intermediate wave 4. The one fourth wave of 1 lesser degree is minor wave 4, and that's all right here. And we've gone into a deeper discussion just about how this all is playing out here. And so we kind of see this pattern, and the market could truly just kind of break and head strongly lower. But again, what I would then need to do, if it broke strongly lower from here and we dropped down into this box, then again, it still would be A, B, and the C wave would be big, but I would just up these to a minor degree. And again, on a time factor, so even if we're using Fibonacci time sequences, an intermediate degree corrective phase, particularly a fourth, should take longer than a few weeks. And we had that same thought when we were tracking the minor fourth wave, that it should take longer. In fact, we had left open for quite a while until the market really broke higher and just wiped out the fact that was it. That's all we're going to get. I had shown it, I had labeled it, but we had left open the possibility that we still were going to come up in a B wave and come back down in a C wave, and that would take us out into October. That was the time frame that we were looking at. So now we're up to an intermediate degree, and we'd be looking for 3 months, 4 months on a timing scale on how long it should take to unfold. And that may still be the case. Again, if this is minute ABC and that's going to put in minor wave A, and then we get a B wave and then a C wave, well, that we'll see. But in this case, I absolutely need to leave open that it's 1, 2, 3, 4, 5, wave 1, ABC 2, wave 2, and we're coming off in a third, which is going to make it much steeper, much more destructive. Third waves are normally the longest and the strongest within a 5-wave sequence. And here we are staring it in the face. And it basically kicked off as that when we saw on Friday that the market just suddenly turned, stopped, and started to go down. And they did not stop until pretty much the end of the day when we got that slight rally. It should be slight, but put about 100 points back onto the NASDAQ as the market prepared and then got ready for that Friday expiration. Well, now we're getting ready and prepared for the December 31st expiration, at least in the indexes. And I think in a lot of the ETFs and anything that basically has zero DTE, 0 days to expiration options. And that's quite a few of the ETFs. That has to be the spiders, the Qs, and others, but also in our indexes, so the NDX, the SPX, the NQ, and the ES. All those have those same December 31st options. Also, December 31st is the day that we know that JP Morgan will be rolling that collar. Now, we know that in the SPX, that the market did go up and attempt to give that a little rattle and give it a knock on the door, and it failed. And so with that in mind, we're looking at the NASDAQ going like, well, it failed here as well, even though JP Morgan does not have a collar in the NDX. So failure is failure. And I'm just saying that what the market continues to demonstrate or just show us is that we are likely within that larger intermediate fourth wave decline. So additional new highs, again, unless we get the big surprise and the market just decides this afternoon or this evening when the Globex opens that they're just going to go up. We're just taking it up. And I'm talking about like we're up like 100, 200, 300 points in Globex to set the stage for tomorrow's opening. That much I actually do not see. Market just really is not necessarily giving us that. So what we have is, and I'll break this down and we'll just take a look at the 1 hour chart. And here again, we can see there's the 3. And then we have, I'm going to keep it as 1, 2, 3, 4, 5. So this could be 1, not A, it could be 1. A, B, C. This could be 2. And this is 1, 2. We get a large decline to start our final 2 days of 2024 trading. Now, with that in mind, I'm going to back out to that 4 hour, gives me a little bit more room to show everything. Okay, so we're coming down. First, we have support at 20,609. So first thing we'd be looking for, if it's in a wave 3 or even in a wave C, that it's going to break below the low of wave A or wave 1. And that's at 20,913. So once that starts to break, we're on our way. We should find support at 20,609, which, by the way, on the 4 hour chart in the NDX, also we have the 200-day moving average. I'll get rid of that. 200-day moving average at 20,779, 20,780, we'll call it. So they should find some support. Now, mind you, that if that just kind of comes flipping down and breaks it, well, then we know we're off to the races. Our next level would be 1.618, and that's 19,848. Now, what this is showing us, even if this is a 1-2, it is giving us what we should be looking for in wave 3, or what we should be looking for in wave C. So we have 19,848, and then we're starting to run into the support levels for the intermediate fourth. Not necessarily looking for those to come into play, but they're there. So we're going to pay attention to it as a support area. And that's 19,428. 2.618 in terms of this wave 3 would be pretty large, and then shift the narrative over to the possibility this is minor A, this is minor B, and we're dropping a minor C. Now, that would be quite the drop. You have to think about it. Where did we close? 21,563. Where's this 2.618? 18,617. That would be a fairly steep drop. Even if we did it over 2 days, it's still going to be a fairly steep drop. Can it happen? Of course. We've seen so many strange things. We've seen the market, for example, on the 16th of November, that the NASDAQ itself dropped 800 points. One day, 800 points. So if we drop 800 points from here, that's going to bring us down pretty far. It's going to take us right down. So again, can it happen? Sure. But 2.618, and then again, I would put that as a, we'll have to wait and see. But if it turns into 5 waves and it comes all the way down to there, then it could be a wave 3, or it can be the C wave. And again, maybe timing wise, I would not really be looking for it to complete that intermediate fourth wave. Even if we came in on Tuesday and just really did a sharp plow down, I think I'd have to be down into here, or actually below it. So what we have set up already are the support levels for that intermediate fourth wave. And the most common, of course, is going to be the 3A2, which is 17,754. And then we have that low of minor 4 at 17,435. That's actually the target here. And then we have the 50% marker at 16,402. Now, again, you have to think about how much we're looking for here. And if they did it really quick, it's going to feel like a crash. Doesn't necessarily have to be identified as a crash, but it certainly will feel like it. It'll just feel like there is no bottom, that everything just kind of gives up the ghost and we just start heading towards the exits. And what's, in my opinion, in the NASDAQ, what will be contributing to that is just the overvaluation that they've given to a lot of these stocks. They push them up. I mean, let's not forget that they were really, in my opinion, in Tesla, aiming for 500. And they got up to 488, and they tried, I think, to get back there. And so in Apple, we were trading up, I think, at 255, 256, and maybe even 257. Yeah, actually, we're up at 258. Stock was down 343 on Friday. So a lot of our stocks have just truly just been pushed up into the stratosphere and new all-time highs for these individual stocks. So bailing now would kind of set the stage for what the market is feeling in terms of not getting as many rate cuts as they were suspecting, the fact that the dollar is not deciding to turn tail and head lower, the fact that the bond market is still declining, so that means yields are rising. Now, granted, in fact, that does suggest that the inverted yield curve is readjusting itself. So in other words, it's like normally what we look for is that the longer term, like the 20-year and the 30-year bonds, are going to have a higher interest rate than the 2-year or even the shorter term T-bills. They're going to have a higher interest rate. So with the Fed lowering that, it helps to facilitate that setup. And so basically, to me, that's kind of what we're seeing in the bond market. We're seeing that readjustment to where we're reinverting the inverted yield curve. So that could prevent a lot of things. But then one tag going against that is just this perception, and a lot of analysts are calling for a recession to kick off the new administration. And that is a very strong possibility. And basically because the new administration continues to just pound us with that they are going to impose tariffs. They're going to impose tariffs on Canada, on China, on other countries, which in effect starts a trade war. And it has never worked in favor for the United States. I'm not sure why they believe that they're going to be different. In any case, these are things that we need to confront. And the market may be, because as we're all taught, the market is forward thinking. Now, whether we want to think that's true or not, it's still the saying. So if the market is thinking forward as to, okay, now we're finished with 2024, we're going to heading into 2025, and actually that will start on Thursday of next week, that we will be confronting the trade war. We'll be confronting these tariffs, which, according to what we hear, that they're going to impose them on day one. So we're already hearing from Canada, we're already hearing from China, we're already hearing from the other countries, Mexico, where these are supposedly going to be imposed against. And we have to understand as well, those of you that think that Costco is fair priced way up here in the stratosphere, think about where they get all their products. They might have Calvin Klein on it. They might have all of these high-end names on the product, on that pair of jeans, on the different things. But a great deal we're getting from China. They're made in China and brought into the United States. Those tariffs will put a cringe and the Grinch for next Christmas, or just the Grinch for 2025, will be in place for as long as that lasts. And so we have to consider that a lot of the high-flying retail stocks are going to get smashed because the prices are going to skyrocket. Whether it comes in price or comes in a tax, however you want to call it, it is going to affect our markets. All right. So leaving it as this, that we're looking for a continuation to the downside here, and I believe it will come in, and I believe that's how we're going to finish the year. So if Friday was any type of a precursor to what we can start to look for, I would think it's going to start later this afternoon, this evening, once Globex starts to open. So we'll have to wait and see. Now, over in the futures market and the NQ, basically the same deal. So we have again, and let me just kind of open this up. I thought I had. Let me just actually check and see if this is the setting. Yeah, I got $25. I think that's plenty. The suggestion was for 50. And by the way, thank you to the two subscribers that kind of came in and said, hey, please, yeah, make that change. And again, I apologize, new computer. And didn't go in and make all those changes and kept having to open it up. But here we are. We can look at it here a little bit more, and we can see the definition because, of course, the futures market trades from the opening of Globex, and at 6 p.m. Eastern, and it trades for an hour after the markets close on New York. So here we are. And let me just continue to open this up. And we can see that on the 4-hour chart, we came down, we tested, broke slightly below the 200 period moving average, and then we raced up for the expiration, getting ourselves to close back above that 200. I'm not sure why, but that's what they do. And so the anticipation would be is like if we just kind of gap. That's actually what I think. Actually, for today's opening of Globex, that we stand to get a gap one way or the other, and in fact, that gap could also come to the upside. Again, not knowing how traders really want to finish the year. So there could be some of the larger players are just like, no, they're bound and determined to go up there and give the JP Morgan collar, which again is in the SPX, not in the NQ, not in the NDX, but give it a good old shake. So we'll have to wait and see, but my own personal opinion is that that's not going to work. Now, I have one other that did not get put in. So let me do that now and just put this fibs for this either C wave or wave 3. So let me just set this up correctly. I will do that in a moment. But so I'll change the colors and get them in there. And so it's a matter of go up and I just edit. Again, different things on different computers. So, and I'm working without a mouse. So I just want to put this in. I'm going to put in that minute color because that's actually what I'm kind of looking at here. And here again in the NQ, I'm still kind of, this is an ABC. I will change it back again, thinking that I had done all this already. I am a little bit off because the NDX I did change. So my apologies. I will make sure that gets done. I'm going to be moving this back to 1, 2, and then a 3, 4, and a 5. And so it's going to be a zigzag coming down, at least for either. Again, it could be 1, 2, 3, 4, 5 minor A, get a minor B, and then we get a minor C. So again, intermediate wave 4 is going to take longer than what the discussion that we're having may be suggesting. So, but I can't write it off. I'm not saying that okay, we could zip down to these levels. I'm going to take it up to one more time. I'm going to take it to the daily so we can talk about this correction. There's the zone. We got into the zone on the A wave. We're back into the zone, right, at the very top off of Friday's deal, Friday's trade. So if we kind of open this up, the levels that we're looking for are down here, are down 17,882-ish. And here we have 382 support at 983. So yeah, that's the area that I'm looking for intermediate wave 4 to come into. How quickly they want to do it, I've gone into the discussion. We got 5 down, then we had this up. We had 5 down, then we had this up. If we have in the next 3 days, which would really be Monday, Tuesday, and then Thursday, accordingly, right? If we're going to do it in 3 days, that this market is going to drop a massive amount. And we closed at 21,715 or 21,720 accordingly. And that's actually the 20 is sitting at 715 on the daily. So if we really start to fall out of bed here, then we broke the 20 and we went back up and closed just above it. Let's say we come back through that, we come back down through the 50. These are the daily. We come back to the 50 period moving average. That's 21,305. The 200 is at 20,276. So we comes down and we start breaking these. We're setting the stage for a watershed drop. We really are. And to come all the way down to here, we'd be down over 1,000 points. Now, have we seen that before? We have. And it came back again in August when we had the Japanese yen carry trade explode. And so who knows what could stir it up this time? Again, could be very much related to the dollar. So because the dollar refuses to kind of relax itself. So the demand and in my opinion, again, just speaking about the dollar, you have to remember it's like if you're not a US, not dealing in the US, you need to purchase dollars if you're looking to lock in these yields via the 30-year, the 10-year, et cetera, the longer term bond issues. So, and yeah, they're going to want to lock them in. If they're thinking that, we have instability in the market, they're going to want a little bit of a return. And so we get that run to safety. We also should start to see gold flip and decide that it no longer wants to go down. And I also think that within the precious metals, they are correcting. And that eventually it will stop and they'll turn and then they will resume their rally and then go up to, again, new all-time highs. Not necessarily, I'm talking gold, not necessarily platinum or in silver, but higher than where they are for sure. Back to the NASDAQ. So what we're looking at here is these are the levels for the whole four. Now, I'll bring it back down to that 1 hour chart, and we're going to take a look on the inside of all of this. And so what we really can see is that it's a 1, 2, 3, 4. So even if it's going to be coming back down and we're going to be looking for a new low below that, we're still likely not going to go too far, although we could gap and that'll be that. But I'm thinking that this could be one of C. So, I'm looking for 5 waves down, but I'm looking if it is going to be a C wave, I'm looking for 5 waves down, and it's going to eventually break below 21,000. And that's the lowest 21,006. I'm looking for that to break there, and that's when we're going to start to get into our support levels. We have the first one at 20,578. So from here, it's a big drop. The big drop to do a 1 or 2 days. It's a very big drop, but I don't think it's out of the realm of reality. Just depends on how and what they want to do. Again, if they just decide, Tesla, we're done with you. Apple, we're done with this folly. And it doesn't mean that the companies are bad, but it does mean it's just like, well, they're overpaying. So, to me, others might have a different view. But I think how things are going to come through as we inch closer to inauguration for the new administration and then putting all of these day one things into motion. Now, a lot of it could be barking, a lot of it could be a lot of things, but still, this is the plan and the market is going to react accordingly. So again, on the hourly, I think we gap lower, and it could be several things. If we get a 1, 2, 3, 4, we gap lower, put in a 5, come back up a little bit, and then just start. But that's 5. 1 is done, then we get a 2, and then we start on the 3 of 3 or 3 of C. And so I am looking for it to build to the downside. That much I'm going to tell you. And again, I will make the corrections in here. I apologize, but then again, it's like the new laptop. So I will get this done. and make these changes. So and put this all back together as a 1, 2, 3, 4, 5. So I just need to move this and change the colors, and it will be put back, and that'll be still a wave. It'd still be an A wave, but it could be minute wave A of minor wave A, or it's one. So it could be minute wave one of minor wave A. So again, my thought process here is that because of the way it's unfolding, and unless I can keep it as an ABC and then shift that up to a minor degree, which would suggest the C wave is going to be like, oh my God, it's going to be deadly. It's just going to be really deadly. In fact, we'd be looking at staring in the face of 1,000-point drop and then staring in the face of another huge drop from the market. So again, people are going to say the market's crashing. That certainly is how it's going to feel if that takes place. If it's more quote unquote orderly, then it's going to come down in pieces. But they should be consistent, and it should take a while. And so we get rallies. So then in between, it's like first of all, volatility is going to explode. That's going to really change the mindset in terms of risk on, risk off. So again, just dealing with the capital flows, dealing with the options flows and the gamma. What we'd be looking at here is the fact that we'd be running through put walls. Now, we thought they're all going to try to capture that call wall, which is at 60.55. The put wall's at 54.50. The same put wall, right? This is now I'm talking back JP Morgan, and we're back over in the SPX. 54.50 is the put wall. So we got a whole bunch of stuff. We got a whole bunch of stuff just going on. We have within the S&P, we've got 6,000. It's still and so in the SPX, 6,000's been surrendered back. So that kind of leaves us open, and now we have 5,900. There's a put wall of 5,900. What if they take that out tomorrow on the open? It's shifting things to a sincerely strong risk-off trade. So everything we've watched them put on during this period, and in particular during this period, has to come off. Now, yep, that was a good start. But then I think as they rally back up, they put a lot back on. And it's not that this is like somebody making a conscious decision. This is all done algorithmically. And it's by the number. So when we broke 6,000 in the SPX going back up, that signaled risk on. And we saw it. We saw them do it. We saw them do it in Apple. We saw them do it in Tesla. We saw them do it in Broadcom. We saw them doing it in a lot of the stocks. Mag 7, we saw them do it. They're going to still shift it around. Right? Again, a trade war, what's it really going to affect? Well, should it affect NVIDIA? As a company that's producing a product that's very much in demand, maybe, but how much of it is really dependent upon Taiwan, what we get from Taiwan. So again, there's a lot going on, and the market has a lot to deal with rather than just, happy days are here again. There's a lot of strong things that the market needs to deal with. And I believe that's the point we're at right now. And there's so many different components, folks, that it really, when we take a look at the big picture, how each one is going to affect equity markets, it's actually the way I kind of view all of this is that the pecking order up at the top, the pecking order, it's interest rates. So we have one side where the yield curve is correcting itself, where short term should be putting out less interest, right? You should get paid less interest for a 4-week, an 8-week, a 17-week, a 26-week T-bill. Fed funds should be cheaper. But a 30-year bond, if you're going to really willing to lock your money up for 30 years, quote unquote, then you're going to want more interest than 1.25%. Okay, so the yield curve should re-inverting itself, where we're seeing the long end start to, move higher. And so those yields are adjusting. And the only way they're doing it is selling the bond. Sell the bond, the yield goes up. So it's a matter of then, what they want to lock in. All right. So again, for later this afternoon, I think we stand a very high chance we might gap. We gap lower and we're going to start this whole downside scenario. And we have our points. Basically, we on the NASDAQ, on the futures market, we're sitting just really above. Where did we finish? 719, 568. Is that 4-hour 200? Yeah, I just think they really come down. I gotta go up. Let me go look at the daily and let's see where all this stuff sits. Yeah, the 200 is way below 20,276. But I'm telling you, I think it comes into play. I don't know if it's going to be Monday or Tuesday, or maybe even the start of the new year. But I'm sure this comes into play as we start to drop into the zone for the market to put in this whole thing. And that's all the way down here. So once we start to break below here, we are starting to get inside that box. And that box is right here. So we're at the very top end of it right now. You can see my right at the top end. We come down here, we're into it. We come down here, we're midway. And we come all the way down, then we're down to the support levels. How quick it gets there, yet to be determined. But I'm going to tell you, a lot of the time, I think it will feel like it's crashing. Now, what I will say about when we get into moves like that, the volatility, which to me, when we're talking about the future, it's the speed at which things are going to move. The volatility will increase to both both up and down. Because when you've got a bunch of sellers are coming in and the buyers are just kind of like standing to the sidelines, it'll just drop. But when they're done and they've walked away, then and whatever buyer comes in, the sellers are not sitting there. Up, it'll just kind of roar up. So if you're a day trader or if you're a swing trader, and this includes stocks and futures and ETFs, you're going to see some strong moves in both directions. Just be really careful. I urge careful, because in the futures market, you could be up $1,000 on a trade in a few minutes and then down 1,500 because you didn't take it off, and the market swings and flips in the other way, and then in the next few minutes it's back down. So that's kind of my point. Just be careful when trading, because these moves can be very, very dangerous and they're going to go quick. All right. I am going to kind of leave it right there. And the next daily will be on Monday, December the 30th, as we creep towards the end of 2024. Have a safe balance of the weekend, and I will talk to everybody tomorrow.